Welcome to Own the Chaos. The stock market is crazy and chaotic.
Oh my God, are you seeing this shit, bro? Tesla closed at $695. What the hell is going on?
Brad and Fat Man Zoom are here to help you own it.
Now with IBM getting in here, I think it's just going to come more to the forefront, and people are going to get more and more eyeballs on Salesforce. Should see a really nice move.
Taking it to the suits, being relatable and hilarious.
We got D's nuts in the crew. Every crew needs D's nuts. You know what D's nuts' #1 holding is? Big C.
Get ready to own the chaos in 3, 2, 1.
What up, everybody? Welcome to Own the Chaos. We're taking a little bit of a I guess it was a surprise live stream for y'all.
Yeah.
We got Don Fron in the house. He's been visiting us in Baltimore. If you guys don't know, Don Fron is part of the Don Fron Show and part of the Own the Chaos / We Trade HQ fam. What's up, man?
What's happening? Glad to be here. Oh, I guess what's up, everybody?
Yeah. Let's set this up. What's going on today? So, we want to level set expectations. First, I want to make sure, guys, do we sound good? Give us a thumbs up if we sound good. Make sure, Don, everybody's good. But we're going to be doing a Q&A. We talked about the overall topic being options, but Charlie from our Discord, Charlie's2369, mentioned Bitcoin. I think it's great for us to discuss Bitcoin as well, but we really want to take it wherever you guys want to take it. So we'll begin the conversation. We'll facilitate it, but this is a live Q&A. Hope you guys will participate, ask questions, and we'll let you know, we'll let you know when those opportunities are.
Eric wants to know if we're singing karaoke this morning.
We can.
I mean, everybody knows I'll be singing.
Bohemian Rhapsody, here we go.
Yeah, let me hear that one.
But let me shout out the first 5. Our starting 5, Frank Timo, Shock City Rocker, Eric Graff, Rudy Brown, and Eden Reese's.
Even on a Saturday, you have no life.
Special shout out to Susie Fromberger in the house.
Yeah.
SuzFronShow.com.
That's hilarious.
She's probably not even watching anymore.
All right. So with
Comment
that
if you are.
said, Brad, one of the big things we get all the time is questions about options trading. Don Fran's part of the We Trade HQ family. So if you guys don't know him, this is him, live in the fresh from Baltimore, Maryland. But he's the options guy. So we'll talk about some options. And you and I actually sat down with him yesterday and had some conversations.
Yeah.
And it's something we don't know about, but we're definitely interested and open to learning more about.
Yeah, absolutely. I mean, like, I've dabbled in it here and there, but the way that Don was explaining it to me, I was just like, man, I have no idea what I'm doing.
Yeah, you probably did what everybody does. Like,
Yeah.
I'll buy a call because I think it's going to go up.
Right.
And then
Pretty much.
They go buy the crap ones.
Pretty
that I showed you.
much, yeah.
Can we start, Don, with, I think this is an interesting story. Tell us how you got into options, because you didn't start in options, right? Like, how'd you end up in options, and now that's sort of, like, would you say that options are your specialty now?
No, it's just another market that I trade. It's just a popular topic, so everybody asks me about it.
Okay, so you trade equal amount in everything. So you do equal share, you do equal options, because then you start in Forex, is that not correct?
No, I just Forex something I do as well. But no, I started off with.
Did you start in Forex?
No, shares. I started in stocks.
Okay, so tell us the story how you got there, and we'll unpackage it from there.
Got into options.
How'd you get into trading?
How far back do you want to go? Like,
As far back as you want, brother. Give us a Cliff Notes version.
How did I get into trading? Just buying. I did what everybody else did in the beginning, I guess. Just I knew I wanted to make money. So there was something I did a long time ago in the 8th grade was I literally was paper trading on a grid paper. We got the Wall Street Journal. My parents got me, and I'm just writing the open and close of any particular stocks. And what I happened to find was it was a penny stock that made armor for Hummers. It was 5 cents a share. I was like, that's cool. I'll pick that. That's the only reason I picked it, because I thought it sounded cool. Just like what everybody else does.
Yeah.
Well, unfortunately, 9/11 happens. It goes from 5 cents to $30. I was like, well.
Holy shit.
My dad was like, imagine if you had $500 now. I was like,
Yeah.
Well, imagine if I had more than that. Like, imagine if I had a lot more than that. So from that point, I just knew stocks are what I was going to get into. So just fast forward, I finally get into it, but commissions are like $20 a pop. So I'm not doing anything crazy. I'm buying Apple because an iPhone might come out. Like that's the kind of news I'm doing. Like, oh, like I'll see something. I make fun of it now, but there's a long line. I better buy that stock. You know, just stupid thinking like that. So I'd buy something, I'd hold it forever, and eventually I'd go up. We're in a bull market, so I would just be right eventually. But then just started taking it seriously. Someone, he said he trades too. I was like, oh, he goes, let me see your portfolio. He said he could beat me. And I was like, no. So then I just dove into it, and then, fast forwarded here, and then same with options. I always thought options were a scam because anything that starts with you can spend less to make more, like sounds like a pyramid scheme. Like just avoid it. But
too good to be true.
Yeah. Then looking into it for the longest time, I've been trading options a lot longer than anybody on even YouTube. No, I started trading options right around the time I started trading or started YouTube. But I never wanted to talk about it if I didn't fully know it.
Right.
So just looking into that and just understanding what they are, and then it was just real quick to see how I don't want to say dumb, ignorant people are when they buy. They're like, oh, I bought this contract. Like that's actually stupid if you know what that is.
Right.
Yeah. Like just like a lack of education.
Yeah.
Like they're not educated on it.
Right. Yeah.
Fully.
Like the extent of their education is delta. It goes up per dollar. Calls are up. Puts are down. Which is absolutely nothing.
Yeah,
like, which maybe that's what you did.
Well, so I am the ignorant one.
Yeah. Well, that's why I don't want to call them stupid because you don't know what you don't know.
Right.
But it's a different. How do I explain it? There's got to be like a building house reference. Like I'm going to build a house, and you think you are, but you have no idea what a hammer and nails are. You're just going to go do it.
Right.
Versus the guy that knows everything is going to go in and
And by the same token, I mean to use the house analogy, when typically a house starts with a foundation, and it's the least sexiest part about building a house, but it's the most important part about building a house, right?
Yeah.
And most people are out here building like a house of cards rather than a true house, which is like you got to do the foundation. You got it, like that part of it you actually don't even see at the end, but it ensures that you can build a house and potentially grow the house and add on to the house. So it's the foundation piece that I feel like a lot of people are missing. And you could learn the School of Hard Knocks and just blow up your account or go to channels like your channel. And basically what you're trying to do is expedite the process. Like how long did you spend? Didn't you say you spent, like, when you decided to dive in, how long did you spend where you were like learning options and like, okay, now I feel confident enough to put it on YouTube?
I'm probably just shy of a couple of years.
Couple years?
Yeah, because I did what I make fun of people now for doing. Like I'll get in a little bit and start playing with it. I bought a T-Mobile call. I'm like, this thing's amazing. So it's shooting up so first of all, there's no sellers at all in this thing. So the bid is the price. So my account is showing just way up. Not the bid, the ask.
Yeah.
I'm like, because there's zero buyers. So all it is the ask. I'm like, this is amazing. I go put in a sell order, instantly drops. I'm like, just missed it. I'm not even seeing like that's what's making the price fluctuate. So that one was 100% loss. I was like, after that, it's like I definitely, because it's like swinging $700, which at the time, like,
well, and that's why, like, I kind of, was always hesitant on options, and I think most people are, because that you could lose 100% of your money depending on how you play your cards, so to speak, no pun intended. But that was kind of my whole mentality. But like the way that you were kind of showing us, and just following along on your channel for however many years now, it's definitely something that I've been more interested in, because I kind of wanted to talk to this point about you can get a lot more for your money with options depending on how you actually play them. If you're when we were talking about being in the money and all of that, you can spend a lot less money and have the same amount of leverage as somebody who is spending probably twice as much or even more than that on just buying flat out shares.
Yeah, right. So what I showed them yesterday was literally in my account, I had 10 Amazon shares for $36,000.
Yeah.
Now I bought a contract at the same time of those shares, which cost $15,000. But so Amazon pushes up. We bought the dip. The shares are up $500. 36,000 is what I have in there, and my $15,000. Well, what is now $15,000 is $2,000 up. Right? What was it? 2,100.
That's fine.
Yeah, around there.
So it was at 13 and went to 15.
Yeah.
Essentially.
Yeah, so spent less than half.
And you got a 4 times return.
Yeah.
Yeah.
So, but it's important to understand when you understand options what they are. When you look at the options chain, every one of those has its own characteristic. There's some that move slow. There's the ones that move fast, and depending on you got to understand that, because when you do understand that, then you can't say, hey, this move is coming. I can spend even less, get the wiry one at the bottom and watch it fly, or hey, this might move around. I want to pad this and go a little bit further in the money and just take advantage of the stock movement.
So I'm a firm believer of like continuing education and getting into options, which I think this year is my year for options as far as wanting to really dive into it.
Yeah.
So I have your course obviously, but and I've looked and I've listened to your course, but I haven't listened to all of it. But like, this is going to be the year of the Don Frank course. So if you guys want to check out his course, Don Frank Show, pretty much every description has the link in there. But what I wanted to ask you was like, as far as the continuing education, like I feel like I can always learn something new for the things I specialize in or that I've done a lot. Like I feel confident to stack up my knowledge of fundamentals against anybody's knowledge of fundamentals, but there's always something new to learn. With options, do you feel like you still learn new things, or do you feel like you've learned what you need to learn and like you've pretty much cracked the code on it?
I'll learn new names. There's weird names for everything, like Iron Condor. Like Iron, once you understand that, Iron is just calls and puts. So like everyone else is learning like the names first. Like there's a jade lizard. There's like all
that
broken
stuff just sounds like
butterfly.
foreign language to me.
It's stupid. You're probably confusing yourself learning it because you're learning it backwards.
Yeah.
Where if you learn the Greeks and just what calls and puts are and vertical spreads, you'll find out every one of those strategies is just a variation of spreads and multiple ones placed in different ways.
So you're saying if you learn Greeks, what else? The 3 things you said: Greeks, vertical spreads, and what else?
That's pretty much it. Just know what they are.
Okay.
Because there's the Greeks,
calls
which
and puts, I think, is what you said.
Yeah, but that so calls are, well, if you're bullish, you'll buy calls or you'll sell puts.
Yeah.
Which that can get confusing because you can buy the contract or sell the contract, and that's how you get wrecked. Sell Tesla calls.
Santiago asks, is it possible to be good at swing trading and bad at options trading?
Yeah, go buy a crap contract. So I make this all the time because I'll say I'm in Amazon calls, and I even showed them on the computer yesterday. If the call I bought was up 13,000, just went up $2,000 profit. If you bought the cheaper contract because that's all you can afford, you wouldn't have made any money at all. Right. So at that point, we can all be in the same thing. The stock can make the same move, but if you buy the wrong one, you're an awesome swing trader. The shares were up, but your contract just went to zero.
Yeah.
Do you think that somebody who isn't in the market that wants to get in the market, is it better for them to start just investing in stocks, swing trading, or is it okay if they go into options trading? Obviously they can, but which one would you recommend for people?
If they were going to put the time into it, and it's actually a mix because there's spreads, you need to be directionally right. Most forgiving, there's no stop losses, but there's a max loss. So if that stock goes from $3,000 to $100 and then back up, you're fine. Where a stock trader would actually hit a stop loss, take a huge loss, and cry that it's rigged. So those are the most forgiving. You need to learn options, what they are first. So in a picture-perfect world, you would buy my course. I know it sounds like a pitch, but buy the course, learn options, start with spreads. Then I would move into shares and get price action, get your target practice down, and then move into the more complicated strategies with options and take advantage of the leverage.
Okay, so we got some questions rolling in, so I appreciate you guys putting in questions.
Yeah, keep the questions coming, guys.
I would say, so team coaching said, I understand you could say you can make 4 times as much, but if it goes the other way, you lose all your money. Like, it works the same way. You're risking, you can make a lot more, but you can lose your money a lot faster. Is that fair to say?
Yeah, but in that same token, I had $36,000 in Amazon, and let's say it crash and burns. It's a cash event, or a cash pull, like the Rona. I had $36,000 risked for Amazon shares that would have just gone down, where I had $13,000 in the contract. So depending on how big your account is, you might want to take it just for that reason, that if it does crash and you're taking a riskier stock, you are going to lose less as opposed to shares. Yeah,
I mean, when you bring that perspective, it definitely makes a lot more sense. And I did see a question. Who was it from? Hold on. I saw it.
Was it Moran? Anthony Moran?
Yeah, somebody was asking if you always buy options that are in the money.
That's the question? Do I?
Oh yeah, from Anthony Moran. Yeah, do you always buy in the money? Is
my sweet spot's actually right at the money. So if you guys follow me, you guys know I trade on zones. As soon as I think those buyers are there, I like to buy it right at the money. So if there's been a couple times I bought Zoom. So when Zoom pulled back, dropped all the way down, I bought deep in the money because I didn't want to spend a bunch on shares. So I spent a lot less on just the contract. So, but that's because I want to give it time. If I'm going to, on my average trade, swing trade, I'm in it for a couple of days. It's usually right at the money. It'll be a little bit cheaper. It's like the sweet spot for buying it cheap, but not just being worthless where it's just going to just drift away.
Gotcha.
I'm going to ask this question. Obviously, I don't know enough about options. That's the disclaimer. I have a very basic understanding of it. How do you read the Greeks? I don't know what that question. I feel like, is that enough information for you to be able to answer that question?
You just look at them.
I feel like Yasmini, clarify that because I think you're trying to say something inside that question. So clarify that a little bit for me.
I mean, I could. I see the question right here? How do you read the Greeks? Once you understand what they are, that's like saying how do I read a 2x4?
I think Yasmini is asking something differently. So we'll see if she clarifies that. Can you briefly talk about IV? What percentage do you look? Well, so this question: what percentage do you look for in buying option calls?
That's a good question.
IV percentage?
No. What percentage do you look for? Oh, I guess. I don't know what IV is. I'm reading questions for people. The danger I run is they may ask the question right, or I don't know what IV even is.
But that's the volatility we're talking about, like with Vega.
Oh, Vegas, yeah.
Again, you got to remember, I don't talk to me like a teacher. I don't know
that was one of the nitrous ones we talked about. So if Delta's going to be the throttle, Gamma and Vega are going to be
So what does
nitrous.
IV stand for? What you said volatility, but I has to stand for something.
That's a good question. I should know this.
All right, so what percentage do you look for in buying option calls?
I don't worry about that.
Okay.
But that's also because that's where you'll get smoked, though. Because we're talking about that, like earnings, that the IV is ranked, so it's up it, right? So after earnings, when that news is out, like we know there's going to be a reaction, so the IV is a lot higher. After that, after a binary event like that, it gets crushed. So implied volatility. Thank you, Savage. Always coming in there with that.
We got you, Don.
Yeah.
There's a general question. How do you set up your day? What does your homework look like? And I think it's just like due diligence or whatever.
Well, that's why I go live with my mentorship. And so I break down the same stuff. I trade the same stuff over and over again. So every night, right now, a lot of Amazon.
Peloton.
Yeah, Peloton. I'm in IPO. I'm in a few things, but for the most part, like the big like bread and butter. It was Tesla, but Tesla's just boring right now. It's weird that I might even be out. I think I bought some Tesla at the end of the day, but I might even be out. But yeah, same stuff. But at that same point, I'm in the same stuff, so I know it better. So my execution is a lot more. So as far as like, do I need to worry about IV crush or anything like that? Like I know the tickers I'm in, so I don't necessarily care about that.
What does your typical day look like? As far as how much time, because I know you trade a lot on your phone, right?
Yeah, 99%.
Very rarely. So 99%. Mm-hmm. So what does a typical trading day look like for you?
Yesterday.
So you're, come on, help me out. So what you're saying, you're saying that, are you saying you set it up at night, the night before, right?
Yeah, so the night before.
They don't know you.
Okay. so the night before, I go through my charts. So the stocks I want to look at, the stocks people call out. So I look for buyers and sellers. That's my whole strategy. So when it gets a zone, I set an alert on that ticker. Like, okay, if it hits there, I want to buy. I set alerts for where I need to know about these tickers. A lot of times it's where am I buying that. So if it's something I really like, I'll sandwich it with alerts. Like, hey, this is headed down. I want to catch that knife here. Or if it turns around, I want to know about it. So I put the alert above it. When that tags, I check it out, see which one it is, and then I just buy it. So my watch will go off. I'll get an alert, and then we roll. Even if I'm getting beat down in golf, like I showed yesterday. Like, there's the alert. I just made some money. Like it sounds cheesy. I don't want to give off the. I've been doing this a while, so for anybody that is watching, it's not it takes some getting used to, learning experience.
Yeah.
But
There's a
other than
learning
that-
curve.
Yeah, but other than that, I don't sit and watch charts all day. That's how you get emotional. That's how you make silly decisions.
Yep.
I just do it all at night when the markets are closed. Nothing's moving it. Nothing's driving my decision. I'll make a clear plan with a level head, and then, like I tell everybody, stick to your plan.
I like that because I feel like I hear a lot of YouTubers, and I think that like average person in general will do it in the morning. Even good traders will do it pre-market. They'll get up early.
Yeah.
I like the night style, and I think I want to try more of that. As far as when I'm looking at charts and stuff, it makes sense.
Yeah. You're a lot more level-headed, and then pre-market, nothing. You're not thinking about, is it a gap and go? Is it a gap and crap? Like I've already thought about all that the night before.
Yeah. Jake coming in with the donation.
Yeah, you get a little piece.
He said, "Hell yeah, Don in the house with the $5
Thanks,
Canadian."
You should just Venmo'd us, Jake. Right? You're giving it to YouTube. Just Venmo us, bro. Cash App, whatever you got. So Frank T. Mo asked, Don, when you're in the green on your call put, how do you set your trailing stop loss? That's through your charts, right?
Actually, no, on this particular one, because options, when you understand what they are, there's the deltas and how it moves, and there's there's gamma, there's volatility, there's things that can spike it a lot higher. Options aren't actually connected to it moves off the underlying, but if it goes bankrupt, you still have that options contract. So they're their own thing. They have their own supply and demand aspect. So when something shoots up, like yesterday, I liked being up in Amazon, $2,000. So I put my stop. Like even when I showed you that red line was my stop loss. So at a certain point, it becomes a dollar amount. I'm watching the stocks, but if the stock just made a big move, like I want it to trend up. If it does all that in 5 minutes, then I know there's going to be not essentially a balloon, but it's going to pop. One pullback.
Yeah.
If it pushes up $10 in 5 minutes, like 1 minute, it'll pull back $2, and you'll see half your profits gone. So at that point, liquidity needs to be a thing. Liquidity is very important with options because you need to have some nerd to buy it off of you. Like someone has to buy it.
Yeah.
So it eventually becomes a dollar point. Like I like $2,000, so I was up $2,200. I put my stop loss right at $20.50 because there's gonna be some slippage when you do tag out. So except for Google. Google's a very popular one. So I like Amazon and Google because they move dollars and it'll move those contracts around. Google's not very liquid at all. So that one I'm setting take profits on. Like it's a $500 spread. If you hit that stop loss, you're dropping another $500.
So do you also set like conditional orders for that? Because I saw that team coaching was asking about like, when you were looking at your watch and getting your alerts about how you made money. So are those conditional orders, or are they just
limit
you're just
orders.
setting? Yeah. Okay. Yeah. That's what I figured. So
I thought that was a Christian thing. I didn't know like is it who has conditional?
He does conditional orders a lot.
It's called conditional orders on the
Depending on
the broker.
Yeah.
Depending on the broker, it's conditional orders, contingent orders, advanced orders. They're all the same thing.
Yeah.
See, on TradeStation, it's just advanced, and you can go through and set all that. But I thought you were just making terms up. I was like, what do you mean? I was like, Christian, it's a limit buy. You just want to buy it when it reaches that level.
No, a limit buy isn't a conditional order.
Yeah. You want it's an
Or
advance.
an
If it does this, do this.
Yeah.
I hadn't seen
scenarios.
Conditional.
Right.
Well, I hadn't seen that on my. And then somebody commented, "Is that a conditional order?" I was like, what are you watching, Fat Man Zoom? I was like, it's not even a real term. Like, almost called him out. And I was like, no, I need to check this out.
Yeah, they're interchangeable.
I think contingent is the best name for them.
Yeah.
Because they're like contingencies.
Yeah, if it does this, then do that.
And there's a bunch of them that you could do. But I think like one triggers another is probably, I think, the most common one.
Yeah.
But I shout out to contingent orders because I think they're the most underused for new traders to remove, to your point, to remove the emotion, right? Like I feel like a lot of traders, they have their plan, but then when it's time to like actually execute in the moment and it's moved up, like you said, 10, 15%, they're like, well, could go up another 10 or 15%. Maybe I won't. So
yeah, that's when greed takes over.
There was a good question that I wanted to pull up. Appreciate all the questions, guys. Oh, shit.
I got one from Funny Pranks Gone Wrong.
Yeah, go ahead.
Good question. He says, has Don ever blown up an account with options? Fun fact, yeah. It was in the mentorship, but I used to have an account with Webull, Robinhood, TOS, Tastyworks. So I had a fun little account. I was doing just spreads.
Right.
And I put $500 in. It was up. I grew it to 1,500, and I don't know. It was relatively quick. But so I'm in spreads, and I'm not managing anyone. I'm in all call spreads, and then the market crashes. Like we're in the road. I didn't even check the account, so I'm still in these options. Burns it straight to zero.
Oh, God.
And like, but somebody reminded me a couple months later, like, hey, whatever happened to the options? I was like, oh well, that's probably toast. Like, let's just go check that.
Go ahead. Sorry.
Oh, sorry. I'm making a killing because I'm short in the market. Like I'm focused on my main account at that time. There was too much money to be made. So yeah, I actually have. It's the only time I've ever blown an account was just that.
Not paying attention.
Yeah, I literally just deserted that thing and said, good luck.
This was a good one. I found it. It's Fortnite. How do you know when to buy a share and when you're buying shares and when you're buying options? How do you make that determination?
Liquidity, and then price. It's rare that I'm in Amazon shares just because of the price. Like, why have that much money tied up when I could just buy that? But IPOF, I have a bunch of shares of that. Not very liquid on the options chain. Again, there needs to be a buyer if you're going to sell something. Like everybody I know you guys love to think GameStop's going to 1,000, but even at 500, who was buying it at 500? That's why it dropped completely down. So you might think you reached that goal, but really it's only worth what someone's going to pay for it. So if liquidity is going to be an issue, you don't have that person to sell to, you're in trouble. So if it's SPACs, probably not. And I get that's a popular topic, and people are whole accounting some stuff, and they're getting lucky. Like it's going to make its move.
Bro, it's so crazy. Like the noobs that are whole accounting stuff and then crushing it and calling us the idiots. It's like at some point they're going to face the music, but like it is kind of crazy to see some people like just doing that with the GameStop folks and everything else.
And they're either going to face the music with their account, or they're going to end up starting a YouTube channel and getting arrested for 22 years.
Yeah.
Getting an SEC.
Oh, no. Jeez.
Just kidding. That was a joke. Thanks, Venkat. I'm pronouncing his name wrong.
I also wanted to shout out Nanda Villa for the donation. Thanks so much for that. Also asks in the donation, what book or books do you recommend to learn options? Do you have any?
No.
Just go to Don Francho YouTube channel.
Well, I should say the course. Like you mentioned, you didn't want to self-promote. I definitely, I see the courses you sell. Like people buy the course, they stick around with you. I think that's the best testament. There are people from the Don Fran show that are in here.
Oh my God, people come into that community and they just never leave.
That's the biggest testament. So I would even say you don't even need to start with the course. Go to the Don Fran show, and there's a lot of content there that you could just start at. There. What would you recommend somebody visiting your channel? 3 videos they should start with, just in general. It could be anything.
1% stop loss the correct way, right? How to actually manage risk and do it. Like, it blows me away. I thought that was common sense. There's that one, and then there's the how I draw zones, my strategy. The thumbnail is just going zone. I'm pointing. It says basically just zone to zone. But that'll at least that should get you up to speed to hang and watch what I'm talking about on my stream. And then my perfect entry types. Tells you when I draw that magic yellow box people talk about, what am I doing in that yellow box? Because you can have that line, but it's the execution part that's more important. So those 3 videos, you started linking them in some of the descriptions.
So all your new videos will have them in the description.
Okay, perfect.
Shout out to Sony in the house. Sony is now a Green Bull. That's pretty awesome.
Hell yeah, Sony.
And one example of somebody who's a supporter of both of us. She's really active in your Discord as well.
Yep.
Christina said, "I will never leave."
It is crazy though, man. I mean, like the diehards in the Don Fran show is pretty awesome.
What's up? What's up, Tan? What's up, James McCrea? The stop loss video was great. James said.
Yeah. That's probably where my chat will come in, because anybody that's seen that's the one video I say that has changed the most accounts.
Yeah.
Like just learning how to actually manage your position and get in a position correctly without losing sleep, or just being so careless you make a stupid decision and just die death of 1,000 cuts.
Right.
So, yeah.
Right. So I wanted to I personally have a philosophical question for you that I was going to ask you off air, but I think it's a good question on air. So answer honestly, all right, even if you think I'm an idiot. So what I believe in, as far as like Brad and I talk about this on the channel, people should have more than one account, right? They could have more than one account. I believe in having more than one account. You have a long-term investing account, right? That's like separate. Is that correct?
Yeah.
You don't touch it. You just add to it by whatever.
Right.
So like people should have a couple accounts. We talk about a short-term swing trading account, a long-term swing trading account, and an investing account. So that's sort of how I structure it. After talking to you yesterday, the more I was thinking about it, I was thinking, well, instead of just now having sort of this option strategy, should I no longer do a short-term swing trading and instead do options trading with the money I was using in my short-term swing trading account? If you're saying it's essentially the same thing, it's just I'm not having to leverage more with higher upside.
Yeah. The important of that is psychology. So you're keeping that clear, and you can do that. I still have I have leaps in my account right now that I'm not going to sell until December of this year, like minimum, unless Wall Street bets attacks it.
So so that's what I would call my long-term
right
swing trade.
So I would say if you're going to have multiple brokerages, if it helps you out, do it. They're all going to have bugs. They're all going to have problems. I like to just I strike when the iron's hot, and the last thing I want to do is do that across 9 accounts on tickers that I like. But
let me rephrase the question, because I don't have multiple brokers. For me, I want this money to be accounted for short term, this money for long term. So my question is there any point if I'm going to trade options with $10,000, is there a point for me also to take $10,000 in short term swing trade, or should I just take $20,000 and just invest in options? Because isn't it doing the same thing? It's a short, like you're looking for a move.
Yeah, you're essentially playing target practice with charts.
Okay.
When you see that move's coming, you think, hey, there's going to be an A and a B. I want to take advantage of that move.
Yeah.
Right.
What's a realistic time frame? What's a realistic move? And then what? Because I'll look at that. Like, here's where it's at. Here's where I think it's going to go. Here's where I don't like it. And then now, what do I want to do? So Amazon, that's a lot to tie up. Maybe I'll check out some in-the-money options, or this is going to be this one's going to catch some hype. I'll grab some cheap ones because I don't want to risk much, but I know it'll spike up real quick, so I'll push it a couple weeks out. So, I would probably just make your short-term swing, I would just introduce options into that one. Because there might still be some, like, IPOF. You want to buy that, so you don't buy options on that, but you just keep that account for that.
Okay. Yeah, and I know you mentioned that as well. There are certain tickers that maybe we looked at Clover.
Yeah.
And you were like, obviously, like there was a little bit more upside, but then when we looked at Peloton from an options perspective, it made a lot more sense.
Mm-hmm. Yeah. Well, how big's your small account? Can you say that? This short-term swing?
It's at like 52,000.
Okay. So if you think Amazon's about to announce a stock split,
Yeah.
you want to tie up most of that account in one share?
I mean, right. The answer, I think you're saying, should be no.
Amazon does a stock split. I'm whole accounting no matter what. Selling everything I have and just buying Amazon.
No, you'll do that, and I'll spend the same amount on options.
Right.
I think
that's the
saying,
point of the question, though. But yeah.
I think the answer that I would give to the question you didn't ask is, I would buy shares.
You would.
But, yeah, because I don't know options. So the compelling argument you're making is, well, I'm going to tell you why you actually shouldn't buy shares and you should buy options. So explain why, in that scenario, the stock split, Fat Man Zoom shouldn't buy shares. I should buy options.
Well, yeah. I mean, you have your whole account, 52,000. You're going to lock up one. You have enough to buy one share. And you're going to take advantage of Amazon's probably going to move, well, let's say a couple $100. They announce a stock split. It's going to have this. Amazon moves $100, $180 in a day. Yeah. No problem.
I'm sorry, can I stop you? What do you mean by only one share? What do you mean?
Oh, unless you're going to buy fractional shares.
Well, a share of Amazon is $3,300.
I'm thinking 33,000 in my head. Sorry. I'm thinking my position. I was like, why would you?
Sorry,
so 10 shares.
Yeah. It took me a
Never
second.
mind. I was like, why are you looking at me so funny? All right. So, 10 shares.
Okay.
But you'll make a little bit of a move, right? You're going to tie up a lot. You're going to have very few shares.
Yeah.
And the real, it's going to catch some hype. It's going to move a few $100, which is an awesome gain, I guess.
So if Amazon, and I'll use my realistic thought process, if Amazon announces a stock split, I would believe that Amazon has a cap of 30%. So I would think my upside, and I'd probably cap it at 20%. So I think my upside would be $600 per share. So $6,000 total.
Yeah.
So I'd be risking $34,000 for $6,000 upside. And you're telling me that I could risk far less and make far more.
Yeah. On a $600 move, that would be.
You're close to compelling me. I mean, so if you give me a good number.
Well, so $600 just in real value is $6,000. in that
On
one
10 shares.
options contract. So now that's excluding time value or anything like that. But if we're going to take advantage of the quick move, I could spend the same amount, $30,000.
Yeah.
I would buy 2 of those contracts I had yesterday, and I would make $12,000 just off that.
Make 2 times as much as me.
Yeah. So, but if I wanted to spend, so I could either make the same amount with 12,000, right? Which is that would be the case for you because are you in nothing right now? Do you have that 50,000 just available?
no,
So
it's
are you going to
tied
close everything out just because you want to buy Amazon?
Yeah, that's a fair
I'm
point.
100% doing that.
That's a fair point. Yeah, I'm not going to sell things because if I'm in it, I believe in it.
Right.
So I
yeah.
might trim something here, but I'm not going to be like, oh, let me clear out my account.
Yeah. Just
So yeah,
take one trade.
you're right. So you're saying then, so I have 2 options. I can use that 30,000, and I can use options and just have a greater upside. Right now, it becomes
This is the high
exponential.
stakes table.
Or to your other point, which is, and correct me if I'm wrong, you're saying is I could risk far less for the same return.
Yeah.
Which would be more likely my case. I'm not necessarily one of those people like I need to make it all right now. But if you could say, hey, I only have to spend 10,000 for the same return, I'm doing that.
Yeah. Well, Amazon's $3,400, right?
Yeah.
I had a 3,300 strike. I was deep in the money. So, or at least $100 in the money. Where
Okay.
at that point we would actually end up probably buying an at the money contract, 3,400. So it would probably cost us 6,000-7,000 around there, depending on how far out you went out.
Really?
Yeah. So the gains that was just playing it safe. So doing that realistically, we would buy a cheaper contract and take a much more advantage. So it would be a whole lot more to the upside.
So Mike Kemner says you're not risking less if you miss time a move, you're risking more. I'm sorry, I thought I understood it. Then when I said it out loud, I didn't understand.
I think it would be the same. You're risking more because if you're going to sit here and bag hold, yeah. So stocks, you could say it's going to go from here to here, but I'll bag hold forever until it gets to here.
Right.
And then now we're wasting opportunity costs. So I would argue you're losing more by sitting in that share. Case in point, Rocket.
No, yes.
Just so, and now I'm not going to bag on, but just imagine because
No, bag on it. Say what you got to say.
Yeah.
I will. But no, I want to get to his point because he's talking about theta. The options are going to expire at 0 or 1. They are running to 0 or something like
Which is my
it.
option. My issue with options.
That's what he's saying. So in shares, there's the up and down, and that's endless until that ticker goes away. Options, you're putting that expiration, you're saying that move needs to happen by this date. So you need to be right. You need to manage these just a little bit more than just I'll hold it until it's green. But to his point, let's say he's going to hold some ticker until it's green. He's going to hold Rocket until it's $30 a share. Think how much money I made doing other things while he's holding Rocket.
Yeah.
So who's actually risking more money? Because opportunity cost is a thing, and then you're just like I would just have a savings account if I wanted to just sit there and not do anything.
Yeah. So, and to your point, and this is where I probably go a different direction than you when I was asking you the question about where should somebody start. Again, like I'll have a better answer when I feel like I'm really confident in options, but just the fact of how overwhelming the lingo is, and you've said like that's just a lot of bells and whistles. The reality is I think it exacerbates already what is there. So if you're a good trader with solid skills, discipline, whatever, you can make more money. So you may make money faster. But I think the flip side is true as well, which is if you're a bad trader, right, with bad fundamentals, you're going to lose it a lot quicker. And in my thought process is I know a lot of people who are like that gambling mentality and they start in options. And most people that I talk to that are in options are losing more than they're winning. But the ones that do win a lot more.
Right. And then I would say ask anyone who's taken my course who traded options before, because they all say the same thing. I say, look back at the options you were buying. Now that you know what they are, what did you think? They'll all tell you those were crap options. Yeah, they won. There was a move that happened. They got that right. So luck or not, they still said this stock's going to go up. They bought a crap contract and it went up. They made some gains. But a lot of times it's crap for a reason. It's going down.
Yeah. So I think people should start in stocks. The one argument that you're definitely compelling me on options to get into it. I am not compelled in that new people should, because I think for like the point I always make is at least you're still in it. Like we always say, getting good stuff, and you invest in good stuff, like getting good stuff like Amazon, even if Amazon has horrible news and they drop down to 2,700, I know you're going to say you're scooping them up. Like we know that Amazon's going to be around 10 years from now.
Right.
So I think that's the hedge is we're trying to get people to just start investing. Just start with buying good stocks.
Yeah.
And then
Yeah.
when you feel comfortable with it, you learn supply and demand, how things move. Then you can like say, okay, let me take the next step, which is options. And now I can make some real money. But everybody's just trying to make the money so quickly. I feel like they skip the education.
That's just what I was about to say. They always trying to make the quick money. I mean, how many times have you and I been asked, or even Christian, Fat Man Zoom, has been asked, just tell me what to buy. And that usually ends up not working out so well for folks. But no, I agree. I think just trying to work on fundamentals and working on just how you can. So I would say, and you can tell me if I'm wrong or you disagree, but I would say, like, if you're just trading straight up shares and just trying to look at a chart for the first time, I wouldn't go towards options right out of the gate. I probably would just trade normal shares so you can get more comfortable charts and that sort of thing, because I think with trading straight up shares, it's a little bit less volatile, depending on what you're trading, obviously. But like if you're just trading Amazon, it's probably a little bit less volatile than trading options. Is correct? Or
naked options? Yes.
Yeah.
But what I said with a spread, so we're buying a call, we're selling a call against it. $5 apart. It's a $5 spread. If you do right at the money, it's going to cost you $250. You run that thing into the dirt, you're going to be directionally right or wrong. You're going to make 250, you're going to lose the 250 you have in it.
Yeah.
But like I said, you're going to stop out. Eventually it's going to hit a choke point and you're going to stop. If there's a flash crash, I wouldn't lose. I would be down my $250, but I have until that expiration.
Right.
So if it actually turns around and comes back up, you locked in a loss. I simply got to just wait it out. And if it comes back up, then I made money. Or if it stays down, I obviously lost it. So there is one option strategy. I think that it's probably safer than shares. There's going to be a learning curve in the beginning, and you need to figure out who you are as a trader, because then you're going to pick because every options contract has its own characteristics, and you need to match that up to the move that's coming. But if you don't know who you are, it's kind of hard to match anything else up. Like, are you going to hold this forever, or are you like I'm going to buy it, if it breaks this, I'm out kind of person? It depends on your level of discipline, I guess.
Yeah, that makes sense.
Well, I'm gonna push back on that. If that's the truth, then because of that, then why do you even have a long-term investing account?
Oh, I really don't.
Well, you just said you did, because I heard you say it before.
No, I do, but that's why I don't talk about it. It is.
You do or you don't, Don.
It's new and it's negligible. I mean, I have Tesla in there. I need to know like a move is coming and it's a back burner play. So like AQB's in there, NNDM, Ford, GM, IWM, and Tesla.
The people want to know, Don, do you have a long-term investing account?
Yes.
Okay.
But
like a politician.
No. It's because my chat's about to roast me. I've tried this. I'm like, all right, I'm going to invest.
We just exposed Don.
No, ask him, because I'm like, I'm going to invest this time. I really am. and then
I promise I'm going to do it this time.
I'm like, I'm going to put my stop in the green.
He's tried to start a dividend account and lasted for 5 minutes and turned into an options account.
Well, it's because dividends just makes pennies. I have dividends in there, and I was like, this is boring. $100. So I was like, I'll buy some options.
The bonus 2 asks, what is an example of option? Oh, sorry.
I wanted to shout out Divya123 New York.
New member.
Yeah, new member. Thanks for joining the crew. They actually ended up saying, this is awesome ways to spend my Saturday lurking for a year. Hey, we love our lurkers too, but thanks for finally taking the plunge and joining the crew.
See, here comes my chat. Don's long-term portfolio has a shelf life of 2 weeks.
And ultimately, it really depends on people. I would say, and this is like, listen, we all have different strategies, but also we all have different risk tolerances. We also have different financial goals.
Right.
Somebody who's working full time, and is literally traveling all the time, and just has a family, doesn't want to do that. Maybe they just have a long-term account and they buy Apple, Tesla, and Amazon, and they call it a day. It really depends on you, and we're just trying to get you all the information, multiple perspectives, because none of us three have the exact same strategy. I will say that the way the way I look at it is, again, correct me if I'm wrong, like, and actually I want to shout out performance coaching, because he said this earlier where he was like, well, shares owning, you're actually owning something, the expiration. That's the one thing that's been a hang up for me.
Yeah.
I'm willing to do options, but the reality is, I believe that if I'm buying a share, I'm buying a piece of a company. It doesn't matter how small that crumb is. I'm buying a piece of a company. So I've had people pitch me their companies, want me as an investor. It's the same idea. Like, to me, options and investing is like, hey, invest in my company, you'll get a 10% stake. If you give me $10,000, you'll get 10%, okay? That to me is the equivalent of going long in a stock. Whereas I'm putting 10,000 in, hopefully that 10,000 is worth more 5-10 years from now. That's my investing. Whereas if somebody came to me and they're like, hey, give me $10,000 and I'm going to turn that, like, and if I get $100,000 in sales, I'm going to give you $20,000 or whatever. I'm probably giving the analogy wrong, but basically they're saying, give me $10,000 but basically I'm going to give you your money back if I go up or whatever, right? There's a shelf life to that $10,000.
Right.
That's kind of how I look at it, where like I'm still owning something. After, if I buy a call for January 2022, I no longer own anything after January 2022.
Unless you exercise it. It's a contract to buy 100 shares.
I know. So if I don't do anything, if I have 2 accounts and I buy one that's just, stock, and the same stock, Amazon, and I buy a call for Amazon for January 2022, in February, there will be something in there and something not. Now, I know I don't want to get too caught up in this, but I'm trying to explain the idea. Am I thinking about this correctly? One thing just runs. There's a timeline.
Well, it doesn't just go to zero. It's going to either go to zero because it's not in the money.
It'll expire.
Yeah.
Right.
So it expires at that point. We're at the brass tacks. How much is that contract? Because that's going to be in your account.
Yeah.
Or you can call your broker and say, exercise that. I want 100 shares. At that. So yes.
Like Amazon, the likelihood of it going to zero is a whatever percent.
Yeah, that'd be stupid.
Single digit percent. Yeah. Whereas a contract, it's a much higher percentage, and like it's percentage wise, it's a much higher percentage.
There is nothing in the options world that is not a give and take. If you're going to make more, the risk is more. Like there won't be anything that if it.
As was that with anything, really. I mean,
yeah, but with options, it's to the T. If you're gonna go, hey, I wanna ramp this one up. Another one just took a hit. There's no stat that's in there. But I do want to answer this guy's question. He said,
"Shout out Willis."
Thanks for donating, Willis. We love you, brother.
This is the bonus. So December sucked for me, actually. He said, "What's an example of an option you lost on recently?"
Yeah, that was a good. Yep.
And he said, "What was your plan and what went wrong in the end?" My plan was Amazon, and Amazon just went sideways, and I just was stuck in my head and waited. Now, if the stock goes sideways, the contract I was in was at the money. It is bleeding out. There is that theta value. There's a time value bleeding out.
Right.
So I'm in there, and I was just too confident in my own self that the Amazon move was going to happen, and it just went dead sideways. It would go up a little bit, go up a little bit down, ultimately nowhere. And I took a hit on that, just burning. Eventually, I just said, "This is enough," and cut it. And then it dropped. I got back in, so I've already made it all back. But just that alone, right there, just not. I guess I should have paid more attention or been more. I don't know. I shouldn't have held like that. Like the stock, typically if the stock doesn't move, neither do I. Like I'll let them show me their hand first before I make a move.
Right.
And that was one time they just waited me out and ended up costing me money. So while I don't want to make it sound like hopes and dreams, I'm obviously making a lot more on options. The risk is obviously there. So if you're not managing it right, if your discipline isn't there, there is that same risk to the downside.
I can't pull up the question, but Willis said something along the lines of fundamentals, technicals, and Greeks equal options is what he put in there. I wanted to just throw that. But shout out to Willis. Good thing he's in the house.
He's always hanging in here.
Ruben Daly. Ruben, how come Fat Man and Don look comfortable, but Brad keeps moving around like he's uncomfortable? You all right?
I'm good.
You good?
I'm just chilling. It's Saturday, man.
I have a question. I'm going to start with you, and I want to open this up. Is investing, so your short-term account,
Yeah.
public account, which is in typically growth blue chip.
Yeah.
Is investing in that way, is that type of short-term swing trading, is that gambling?
No.
No. Okay. Is OTCs, penny stocks, gambling?
It depends
On what?
on the kind of due diligence you're actually doing.
Okay.
And I mean, like for me, if I'm trading over-the-counter penny stock that's valued at 0001 or whatever, I gotta make sure that the share structure is good. I want to make sure that they actually have a viable business that could turn into something. Obviously, it's much more speculative than if I'm buying Amazon, but I just still don't consider that gambling.
And options as you know it, do you think that's gambling?
I used to.
Now, what do you elaborate on that?
So, most of the options, aside from Don, most of the people I've seen playing options are buying something for like $100 and turning it into 10 grand and taking that 10 grand whole, accounting it and turning that into 100 grand or whatever, So like, that's just kind of like, this is way too good to be true. And then eventually those people end up blowing up their accounts and losing all that money, taking it all the way back to zero. So, the way that Don's explained it, I would say they're one and the same, just done differently.
Yeah. Okay. I would agree. So the question I want to tackle is a question that, or is a statement that I get made a lot. So the question is XYZ gambling? All right. And I hear a lot of people, and honestly, it's a lot of people that are like Barstool community, because Dave Portnoy said this, but I hear a lot of people that aren't into markets or any form of investing. I hear them say, well, the stock market's just gambling. I think that's not, I don't think that's a correct statement. You don't think that's a correct statement. Is it gambling or is it not gambling?
I mean, I quit that argument so long ago. Like, that's why my shirt says professional gambler.
Follow me, because that's not where I want to go with this.
Yeah,
just simple yes or no. Do you think it's gambling?
No.
Okay. And I would imagine your thing's the same. Like, if you know what you're doing.
Yeah, you can turn it into your own personal casino if you want. You can piss money down a drain faster than you can a casino. But
the reason why I want to bring it in this conversation is because, listen, there's a level of risk associated with anything.
Yeah.
Now, if you know what you're doing, I don't believe it's gambling. But what I would say is you have a background in real estate. Mm-hmm. And I want you to tell me if this is a fair argument I make with people who bring that up to me. Mm-hmm. I don't think the stock market is any more gambling than real estate. So if you think stock market's gambling, you buying a house would also be considered gambling, where you're making a bet that it's going to go up. Now you have a physical product, but technically owning stock is, if boiled down to, like, there were stock certificates. You used to get something physical.
Yeah.
Like, so is the argument sound in that, well, then if you consider that gambling, then real estate's gambling?
Flipping houses, I would say, is the gamble, because you're about to buy a house and hope behind the sheetrock is what you thought it was.
Yeah.
So that could be one of the biggest gambles you take.
Well, I'm not. They're not saying that. They're saying stock market's gambling, and I'm saying
they just have no idea what they're talking about.
But I'm saying, well, if stock market's gambling, then real estate's gambling.
I mean, really anything
driving to work is
really
gambling.
anything that you put your money into and expect a return.
Yeah.
If you keep that mentality, then everything's gambling at that point, because everything has its own inherent risk. It's just where you plan on putting your risk. Where your money at to risk. I mean, Pokemon cards, for crying out loud. People buy Pokemon and then all of a sudden it's like, oh, well, I'm going to put my money in here. How is if trading in the stock market is gambling, how is something like that not gambling?
Divya says, what's wrong with gambling? Nothing. Absolutely nothing.
That's true.
And I'm making more of a point to people's fundamental lack of understanding of the market.
Yeah.
And most people, my point is this, most people think real estate is not gambling if you ask them.
Yeah.
But if you really break down what their argument is, then you have to level set what it means, because to me, the stock market and real estate, they're one and the same in how you put money in and hope for a return over time.
Yeah.
So Jacob even hooked us up with the definition. Gambling is the wagering of money or something of value on an event with an uncertain outcome, with the primary intent of winning money or material goods.
So real estate is gambling.
Yeah, because you buy a house and I hope it doesn't crash. Everyone keeps talking about the stock market crash, which, by the way, sorry, it's not happening.
Yeah, right. Yeah.
Sorry for all the other YouTubers.
Yeah.
It's not crashing.
No.
Well, and by definition, it would all fall under that.
Yeah.
The problem is that most people don't have the dictionary definition, and they operate by their own set of assumptions.
Yes.
And my hope is that, here's what my frustration is. There's so many people that come into the market and go because they came in, bought GameStop. more people are coming in buying GameStop than they're coming in buying Apple stock.
Oh, yeah.
Right?
Oh, my friend right now, his first trade, Neo, basically holds account, holds it over the weekend. I'm like, what? Didn't know about Neo Day or anything. I'm like, I'm glad that turned out for you. Then he tells me about GameStop. I'm like, get out of that. Now, luckily, he didn't listen to me.
Making us all look like idiots.
Yeah, because so it makes. Hopefully, he actually sold.
He didn't sell. I don't care what anybody says. Anybody that jumped in, they did not sell.
They were dead set on 1,000.
Yep.
I'm just saying. I hope he did because he was up a lot. But
it's like these Dogecoin people that think it's going to $1. Kick rocks.
Oh, I know it kills me. I'm like, what are you doing? Like when you know what you're doing, you see everyone else making these moves. I was like, no.
Anybody that's been in a casino knows if you've been in a casino. Everybody has that buddy, and it's been us sometimes. That's like comes back, it's like, man, I was up $2,500. Well, how much you leave with? Nothing. Like, I don't care what you were up. Like I don't care what you were up on GameStop.
So
You're still
true.
holding that shit. Don't lie to me.
Yeah.
Don't be your account.
Yeah, I know. I haven't said it yet, but I want to say, let me see the sell order. Like, let me see where it filled at. Let me see because I'll show you mine. Like,
Speaking of Dogecoin, let's talk about crypto because somebody asked really early on, as far as would you advise to have crypto as a small piece of your portfolio, essentially as a hedge. Like people use gold as a hedge. I want to answer that. What's the answer to that question?
yes.
And you've recently invested in
Switch
Bitcoin.
gears. Yeah. So I made fun of Bitcoin a lot. Even though I traded Bitcoin, I was still making fun of it last time. Last time it pumped. It wasn't until I saw institutional reactions in there.
Yeah.
That I thought, okay,
PayPal and all that.
yeah, if they think something's going on or they're hedging the dollar with that, then that's something I want to be in. I don't care about the 9,000 coins. Dogecoin is a literal joke to show everyone how easy it is to make a crypto and just people are buying it.
Right.
Like,
Yeah.
I'm not going to get caught in that trap. Like Bitcoin and Ethereum. Some people are talking about Litecoin. I've had it before. I don't think I'm on. I don't care about it anymore. But
Yeah.
Bitcoin and Ethereum, I think you should just put your gas money in it. Like money, don't put your savings in there. You every time you get paid, you toss a little bit in there. What you just dollar cost average. If it goes up, it goes down. That's been my strategy recently.
Yeah. So he does have a long-term investing account.
It's the first time I've actually. But that's because Bitcoin's volatile, and I'm not into trading that right now. Like, I don't care for it. Plus, there's fees, so I'm just gonna dollar cost average into it, sell it at Bitcoin to $1 million.
Yeah, I have a little bit of Bitcoin, but I'm pushing more in Ethereum.
Yeah, actually, when I made that Bitcoin video, I was like, nah, Bitcoin, I'll have a little bit of Ethereum. Now I'm a straight just 50-50 every week. I just put some money in there, both of them.
Which platform do you recommend to trade crypto? You do Coinbase, right?
Yes.
Okay.
I'm going to put my link in their description.
Is there anything? What's the case on, like, I mentioned before, getting the grayscale, like people who invest in
Grayscale
stocks.
Bitcoin.
Can you just do that? Can you just get grayscale Bitcoin and buy it as a stock and just?
I look at that like futures contracts in the stock. So just it moves with it. Hedge funds aren't allowed to buy Bitcoin, so that's why they're buying grayscale Bitcoin. I'm not against it. I just personally would rather just have the coin
Bitcoin
itself. Yeah.
Okay. What are your thoughts on that?
I still have yet to really come up to a decision. I will say though, this whole thing with Robinhood and the way that they handled the whole GameStop bullshit has definitely caused me to stop and think a lot more about getting into crypto.
Yeah, I think that's the best thing that happened to crypto was the Robinhood situation.
Yeah, and to that point, I guess to bring back to Coinbase, another reason I like just physically owning it. I've already sent Bitcoin to people, and people have sent me Bitcoin just from Coinbase. So sending it like a currency, almost like we would Venmo cash.
Yeah.
So just that aspect of it. I can't say, hey, send me grayscale Bitcoin. Send me a couple shares if you will.
I will say I have Square, and I'm very happy about that. So I don't own Bitcoin outright, but it's heavily influenced my Square position, which is amazing.
I think everybody should have some exposure to it now.
Yeah.
Yeah.
Willis said 10% is worth a crypto portfolio. I think that's sort of like the
I like
overall
that.
consensus is like a 10% exposure to crypto. And then again, like just do your due diligence. Like figure out which one, Don's got 50-50.
Right.
I've got 90-10 in Ethereum, and I probably won't get any more Bitcoin, but I like Ethereum. And then some people have Dogecoin, but you have Square, so you're in the game as well.
Let me just put this disclaimer out there. Be careful YouTubing Bitcoin or crypto, because it is a religion. I will murder you if you don't believe me, or it is a scam, and you'll give everybody their opinions.
Bro, like I was watching the Winklevoss twins try to explain Bitcoin to Dave Portnoy, and it literally was, they were, I don't know, it was very cult-like.
Pomp did a shitty job too.
Yeah.
I think he did a really shitty, for a smart guy.
Yeah.
Pomp on his podcast with Dave Portnoy did a horrible job.
Yeah, yeah. It literally just creeps me out even more when I hear them talking about it.
That's why, honestly, I invest in Ethereum more, because, like, what I found, just the compelling case is far more, to me, it's like convincing in Ethereum. Like, I've found the compelling case I've found where I'm like, okay, I can, I'm not all in, but I'm getting more and more confident in it. Crypto as a whole, like you said with Robinhood.
Yep.
I understand the case for Bitcoin, I think. But yeah, I mean, like they did Pomp did a horrible job. Most of those people that are just all in and blinded, they do a horrible job, because to make a good investment, you need to understand both sides of the argument. And if you're not, I feel like I'm getting a little fired up. If you're not giving the bear case and only the bull case, and clearly you're biased, and it's confirmation bias at play.
Yeah, for sure.
There was one video, so Andre Jick, I think I'm saying his name right?
Yeah.
He did one video that kind of made sense to me, and that's where I just went 50-50. He said, if right now we have gold and the dollar, Bitcoin later will be the gold and Ethereum will be the dollar. Not that it's going that way. We're not going to get rid of the dollar, but
right.
To look at that, like that will be the backing.
That's
that
fair,
will be the currency.
I haven't heard that. That makes sense. And now gold is
crap.
Yeah.
So buy Bitcoin, so it'll eventually be crap.
Yeah.
That's why I like Ethereum, is because there's use cases for it, and it's the blockchain. Like Litecoin, Ethereum benefits, Bitcoin, Ethereum benefits. Any of those move, Ethereum benefits. So for me, it's just, unfortunately, the timing I got in, it's moved far more than, I started like, I think 3 months ago, probably 3 months ago, and it's moved more as a percentage base over Bitcoin.
Yeah.
By like 3 times, like 3x.
For now. I mean, it's playing catch up.
Right.
But
yeah,
I hope the Goldman Sachs guy's right. He thinks Bitcoin's going to $1 million.
They have no fucking clue.
Yeah, but I want him to be right. I just want him to be right, okay?
There's been no model put out that it resembles anything that makes sense. And you're talking about things.
Are you talking about Kathy? Are you talking about Kathy? Because Kathy thinks it's going to 500,000. There's a lot of them think 500,000, 650 in the next 2 years.
Yeah.
Goldman Sachs, he was out there. He said
Chamath's even said that too.
Yeah.
Yeah.
You can't tell me that, like, we're in uncharted territory.
We are, yeah.
Like, nothing's ever existed like that. So you're telling me they're just trying to get headlines, man. And I'll tell you what, I was thinking about this on the drive over. And we maybe need to do a video on this. Stuff like CNBC, like you look at CNBC's YouTube channel, nobody watches it. But the traditional news outlets, I believe they're going to get taken over, especially with Clubhouse now.
Yeah.
By things like YouTube creators that people trust.
Us.
Clubhouse. Clubhouse is going to take over the big like media sites.
Yeah.
Because they don't have, like shady money behind it.
Right.
What's up?
Oh, just a notification of another YouTuber says the coming market crisis.
For Christ's sake.
All right, we got a couple more minutes, and we can wrap this.
Let me answer this question.
I know you got to hit the road.
When would you get into Dogecoin? Never. Like quite literally ever.
I would get in right before Elon tweets.
If I felt like lighting my money on fire, that's when I would buy Dogecoin.
Well, I'm on Coinbase, and they don't have that crap on there. So,
well, Webull literally just put the Dogecoin chart on there.
Oh, that sucks.
Yeah. Like they look for anything to be bullish on.
Yeah.
Like Mark Cuban said, like, they go a lottery ticket or Dogecoin. Right. Buy Dogecoin, right? And that was like the tweet, got everybody excited. And then he goes, Don't ask me to pick between Dogecoin and anything else.
Yeah, right.
They conveniently left that part out. It's like the lowest statistical likelihood you're going to make money. Yes, Dogecoin will do a little bit better than that.
Right.
At least you can hold it and it's still there until it maybe does turn.
Yeah.
So yeah, if you're going to spend $1 on a lottery ticket, I guess you could put $1 in Dogecoin. Buy 10 of them.
Why don't you just give like final piece of advice for people trading? Like, what's the one piece of advice that you think would make the biggest impact on the average trader?
Yeah, subscribe to my channel. No, I'm kidding. Yeah. The average trader.
Don't bet against Christian. Fat Man Zoom.
I would say there's no rush. Stock market's not closing tomorrow. Right. You don't need to make your money tomorrow, next week. Take your time. If you're going to turn this into an asset, like take the time and do it right. Like build the foundation. Yes, there's going to be people in the chat that are hyping stuff up. They're either be hyping stuff up or talking about their gains, and just, that's cool. Congratulate them. Get the digital high five from someone you're never going to meet. But then just worry about yourself, worry about your gains, and just build it. Slow and steady wins the race.
Appreciate that. Any final thoughts?
No, man, I just appreciate you coming out. I mean, the man drove 16 hours to get here.
Yeah, it's fun.
And stayed for
36 hours and going back home.
Super Bowl. But I've had more crab now than I probably had in the last 10 years.
Yeah, so anybody comes to Maryland, we're just going to feed you crab, and that's about it.
It's amazing.
And we're going to give you the Baltimore beatdown. Tell them about the Baltimore beatdown.
Listen, let me tell you, there's a video that's about to come out, and they edited to make it look like I was absolutely terrible.
He was absolutely terrible.
My side story, I don't know if you were there for this last night. My favorite part of last night was when we were at the horse you came in on, and that girl lost the bet to me, and you're like, don't ever bet him. He only bets things that he's going to win.
Yeah, I was there.
And I was like, Don figured it out. Because if we ever go to Kansas City, and I'm not going to go shooting, I'm not going to. You're gonna be like, let's do something. Let's go shooting. I'll be like, nope.
Yeah. So I did get
Laser
beat.
tag, nope.
Got beat in golf. Got beat in ping pong. They have a ping pong table literally right over here.
You got
offset.
beat down in golf, and we've been talking about that. You've had 8 months to get good at golf.
Yeah. It sometimes just takes time.
Own the chaos. But we also did record another video. We did contact.
Yes, it'll be on Don's channel.
And a lot of people were asking about specific options. I didn't want to go there because you don't have your computer. We don't have the charts. But we did record a video that should be coming out. Hopefully we can get it out before Monday pre-market. And basically, Brad and I pitched you on our favorite 3 stocks, and you looked at the options, and you picked one of our stocks to actually make the trade over the next 30 days. So if you guys want to know things he play, check out the video, subscribe to Don Fran's channel.
Yeah, so I surprised them. So they came up with 3 stocks, gave me their case, said I had to put $1,000 on it. So I'm going to play that $1,000, and the winner's going to get half the gains.
Yep. So one of us is going to be rich.
Also, shout out to you guys who are watching, because we went live on a Saturday, and any of you West Coasters, you're real troopers. So thanks for the support. Thanks for watching. We appreciate you guys. And that's going to do it for us. We are doing Stock Watch Sunday. It will be at 5:30 p.m. Eastern time tomorrow because, the Super Bowl. So make sure you guys are setting your clocks and put those notification bell on too. So that's going to do it for us.
Why don't you shout out your Sunday Stock Talk?
It's going to be after the Super Bowl.
So he's going live after Super Bowl.
I've not
go
watched
check
the
him out. If you
legit
guys
whole
have
game.
never met Don before, go check him out at Don Fran Show. He's actually a featured channel on my channel homepage as well. We'll put the link in the description. And that's going to do it for us.
Bye.
Thanks for hanging out, guys. We'll catch you tomorrow.